You may be thinking that I should be making a video about buying used cars because they're risky, they may have a hidden past, and you're absolutely right, which is why I've already made one. I'll leave a link up there. What you may not be thinking about though, or what you may not even realise, is that buying a new car is often a bigger risk. The most expensive cost in new car ownership is its depreciation, and new car owners understand this. When they buy a new car, they've made a decision. They're willing to spend this much money over that much time to have that car. The car is worth it, but here is where it gets risky, because if the amount of time they can have that car for reduces significantly, maybe something in their life changes, maybe the car's just giving them a bad back and they need to change it. But if the amount of time they're originally planning to keep the car reduces significantly, well, that car can end up costing that owner an extortionate amount of money in a very short period of time. It's not the only risk in buying a new car, but it is one of the bigger risks. Here are some examples. It's probably better you're sitting down for this one. I'm going to tell you the depreciation of a base level car, a mid-spec car, and a top spec performance car after only one day. Shall we start with the base level car? A Toyota Aygo Cross in pure trim, pure being the base level of the base car. 1 litre engine, 72 brake horsepower, which is about as low as it goes these days for new cars, and a manual transmission. New price from Toyota, £16,730. I went onto Auto Trader and found the exact same car in the same trim and even the same colour with only 200 miles on the clock. £14,710. That is over £2,000 loss in retail value in essentially 1 day of ownership, or 200 miles of the car just being registered really. But that's not the full story, because if you were a new owner of a brand new car and you wanted to get rid of it quickly, it's unlikely you're going to sell it privately, because not many people like to buy nearly new cars from private sellers. They like to buy them from dealers. So you're probably going to end up trading it in, and you're going to get trade price. I went to CarWow to get the trade price. £13,182 is what CarWow are offering. That's £3,548 loss in just a day, or just registering the car. The original owner of this car, if they're planning to keep it for 3 years, were probably willing to lose about £7,000 or £8,000 over 3 years. And they probably thought, yes, I can afford that. But if their circumstances changed and they found out very quickly after a day, a month, or even 2 months that they couldn't keep the car, can they afford to lose £3,500 in that short period of time? Probably not. For the mid-spec car, I chose a BMW 1 Series, the 118i M Sport. M Sport being the higher trim level of that car. It has a 1.5 litre engine with 136 brake horsepower and a manual gearbox. From BMW, £32,195. On Auto Trader, the exact same car with 200 miles, £27,990. So that's a £4,205 loss in retail value. But to trade it in, well, CarWow, their price was £23,793. So that's £8,402 lost in just 200 miles of the car, or basically, like the last one, just registering it is going to lose you about that. If you kept it a couple of months, it's not going to lose you much more. If you kept it a year, it probably would lose you a little bit more. Maybe it would lose you £10,000 over a year. But the original owner of this car was probably expecting to lose about £15,000 over 3 years. That doesn't mean that they could afford to lose £10,000 over 1 year. That's over £800 a month. And if they only had it for a few days, they're still losing about £8,500. So you can see, if you buy a new car, you want to make sure you can keep it for a while. For the top spec car, I'm going with the Audi RS4 Carbon Black. That's the mid trim. The RS4 is based on a fairly ordinary car, the A4, but the RS4 is far from ordinary. This one's £82,480 from Audi. And what does that get you? It gets you 2.9 litres, 6 cylinders, 444 brake horsepower, comfort and sound pack, RS sports exhaust system, red brake calipers, and Daytona grey pearl effect paint. With 8 miles on the clock on Auto Trader, the exact same car, same options, same trim, £69,785. That's a loss of £12,695. And to trade it in with CarWow, they're offering £61,829. So that's a loss of £20,651. So if you bought this car and kept it for weeks or even a few months, you're probably looking at a £20,000 to £21,000 loss. Not many people are able or willing to deal with that. So the biggest risk in buying a new car is knowing whether or not you're going to keep it long enough to spread out that huge depreciation over a long enough period that it becomes palatable, affordable, and worthwhile. I bought this car new 10 years ago, and I took a huge hit in depreciation in the first couple of months. But I've had it 10 years now, and I've spread out that depreciation over 10 years, and I'm very happy with how much it's cost me over the period I've had it. In fact, I've made a video about it, I'll leave a link up there, where I include how much it's cost to keep it running, including repairs, for 205,000 miles. It's now got 208,457 on it, but when I made the video, it was 205. When I bought this car, the deal was 50% deposit, 0% finance, and I took them up on that offer. But even without that offer, I still would have put a large deposit down because of the next risk in buying a new car. And that is negative equity, or having to pay to sell your car. What happens is, because new cars depreciate so quickly, it's much more likely to happen with new cars than used cars, because they depreciate so quickly, your car is worth less than what you owe. So if you want to sell the car, yeah, you can sell it, trade it in and get the value of it, but that's not enough to pay off the agreement, the finance. So you have to top that up and pay the rest with your own money. You have to buy your way out of the car, which is not a good position to be in, particularly if you're having to sell the car because you can no longer make the payments. Something in your life has changed, you can't make the payments anymore. If that's the case, then I'm guessing you're probably going to struggle to buy your way out of the car as well. So it's a good idea to put a big enough deposit down to make sure you're always in positive equity. Throughout the agreement, your car is worth more than what you owe. So if you need to sell it, you can. And you'd probably get some money back when you do sell it as well, because your car's worth more than the agreement. The next risk many people don't consider a risk, but I do. And that is not getting the best possible deal on your new car. How is that a risk? Well, let me explain. When you're buying a used car, no two cars are the same. They have different age, mileage, and condition. So you may look at a few cars and you may choose one that costs a bit more than the other, but you can justify it because it was in better condition or it had lower miles. But with a new car, if you pay more, you can't really justify it. They're exactly the same car. Their age, new. Their condition, new. Their mileage, delivery miles. They're exactly the same car, but you risk spending thousands of pounds more from just not looking hard enough. Here's one. Nissan Leaf Tecna, top of the range, 39 kilowatt hour battery, 148 brake horsepower. If you walk into a Nissan dealership, and don't try, £32,570 please. But if you have a little bit of looking, I found a pre-registered one with 10 miles on the clock. I'll get into what pre-registered is soon, a little bit later, but it's basically a new car. It's not had any public owners, it's not been driven on the road, it's a new car, it's exactly the same condition as the one that you bought from just walking into the dealership and buying one that's not pre-registered. £16,995. So that's a £15,500 saving from just having a look. And even if you don't go down the pre-registered route, you can usually get a good discount just from shopping around. CarWow, for example, many manufacturers that they deal with, they can get good discounts from. So in my eyes, that's a risk, because if you don't look, you risk paying a lot more than you need to for the exact same car. So what's a pre-registered car? Well, it's a brand new car that a dealer has bought and put number plates on it. Why would a dealer buy a car themselves and put number plates on it? Because now it's technically a used car. Even though it's not had any public owners, it's not been driven on the road, it's probably in storage, it's a new unused car but with used car status. Targets. Dealerships have targets, and if they reach their target, they get a bonus. The manufacturer gives the dealer a bonus if they sell enough cars. The manufacturer doesn't care who buys the cars as long as they're sold. So if the dealership is a couple of cars off reaching their bonus, they may buy a couple of cars themselves to reach the bonus. Yes, they're going to take a bit of a loss on the depreciation of registering that car, it becoming a pre-reg car, but the bonus they get from the manufacturer outweighs the loss of pre-registering the car. And that's why they do it, and that's why you can get yourself an extraordinary discount. There are a lot of pre-registered electric cars around at the moment, and I can only guess why. I don't know this for a fact, but what I do know is that this year in 2024, 22% of manufacturer car sales need to be zero emission vehicles. And for every car that means they don't reach 22%, they get fined, the manufacturer gets fined £15,000 per car. I know that, that's true, but what I'm not sure of and what I am assuming is that the manufacturer is supporting the dealer to pre-register that electric car so it counts as a sale and they can meet their 22% target and avoid that £15,000 fine per vehicle. They will take a loss on the electric car, pre-registering it and selling it at a loss, but that loss is better than the fine. I'm also suspicious that that may be why petrol and diesel cars are so expensive at the moment. The price has gone up so much, seems to have gone up more than inflation. I think, again, I don't know for a fact, but I have my suspicions, that is happening so that people buying the petrol and diesel cars can fund the money they're losing on electric cars. Another risk is falling into the PCP circuit trap. PCP stands for personal contract purchase, and that's how many people buy new cars. They put a deposit down, they pay monthly, and then they pay a big final payment at the end if they want to keep the car. And that final payment is so big that usually it's slightly less than half the value of the car when it was new, so not a small figure. And what a dealer wants you to do is to get on their circuit. You buy your car, put down your deposit, and you pay monthly. And when you get near the end of your term, they're going to call you and say you can either pay that big payment you've got to pay, or you can get a new car and keep paying monthly. It's got a few new features and the price is going to go up however much, tens of pounds per month, usually, depends on what's happening. At the moment, interest rates have gone up, so it's quite often a bit more than that. And then you do it again, you buy a new car. But you have to ask yourself, you keep buying these new cars every 2, 3 or 4 years, did you actually want that car? Or are you just doing it because you're afraid of that final payment and you think that monthly payment seems easier? But long term, you're spending a lot of money on your cars. The longer you keep your car, generally, the less money it's going to cost you. To a point, of course, when a car gets so old, it's going to start costing you more, but that's not at 3 years. What you are doing is you're being an excellent customer for the dealer because you keep buying new cars and you keep supplying them with used cars, which is great for them because they make a markup on the used car. Actually, usually it's bigger than the new car. I'm not telling you what to do. I'm not saying you should or shouldn't buy a new car every 2, 3 or 4 years. That's entirely up to you. I'm just saying don't become complacent and know what it is you're buying. Do you actually want that, or are you just buying it because you're afraid of that final payment? Even if you refinance that final payment, eventually you're going to be off that circuit and you're going to own that car outright. And when you own that car outright, you have a residual value in that car. that car is still worth something. And when you do decide to buy a new car because you've seen something that you actually want, you go, I really want one of those, you have a big deposit. Your car's value can be used as a deposit. You can trade it in and get the car you want instead of just getting stuck on that circuit. But what you do is entirely up to you. You may be thinking now that I'm against buying new cars, but that couldn't be further from the truth. I bought 3 new cars myself and my other half bought a new car last year. So between us, we've bought 4. All I'm saying is that in my experience and in my opinion, you are risking more when you're buying a new car than when you buy a used car, because there's more to lose if you get it wrong. Now, I am comparing apples with apples. I'm talking about buying a new Volkswagen Golf for £35,000 instead of a used one that's 5 years old. I'm not comparing a new Golf for £35,000 with a 15-year-old Aston Martin V8 Vantage for the same price. No, completely different. I'm just talking about the same car here. Yes, with the used one, you have that mechanical risk because you don't necessarily have such a good warranty. You may still have some kind of warranty. With a new car, you have a very good warranty, but if you choose the wrong car or if you can't keep it as long as you expected, you have a lot of money to lose. Or even if you just buy it at the wrong price, you can end up spending thousands of pounds more than you needed to. So if you are buying a new car or thinking about buying a new car, make sure it's what you want. Think, in a year's time, am I still going to want that? Am I actually going to use it? Is it worth it? Or am I going to think in a year that I'm paying all this money per month towards it and I'm only using it so many minutes per day? I'd rather have that money to go towards something else. So are you really happy with those payments long term for the term of that agreement? But also make sure you choose the car that's right for you. Don't just walk into the dealership and accept what they give you, a 15-minute test drive around the block. If they know that you are serious about buying it, you may be surprised how long they will let you have the car for. I think half a day easy. You may even get it for a day if you push them, and then you can really test that car and make sure it's what you want before you sign on the dotted line and end up taking the plunge and possibly, well, losing a lot of money in a short period of time if you change your mind, as I've explained in this video. So why is it then I've never bought a nearly new car or a pre-reg car in my life? I've bought 3 new cars and the used cars I've bought have been, well, fairly old. And that's because I was never intending to buy new cars. Each time I've gone and bought a new car, I wasn't intending to. I was looking for used. When I bought this car, I was looking for used. I saw the used ones, £17,000, and the new ones, £20,000. I thought, wow, why would I do that? Just get the nearly new for £3,000 less. But the new one had £1,000 dealer contribution, so that's essentially a £1,000 discount. So now it's 19, not 20, so £2,000 difference. And the new one had 0% finance, and the used one had interest. And when you looked at the term, there wasn't much in it, and I thought, well, if I can get the new one, I will. Choose my paint, choose my options, happy customer. Same thing when I was buying the MX-5. I was not looking for a new car. I was looking for a used ND2 in blue. And I went into the dealership and I saw a white one in the distance and I thought, don't really like white cars. Then I got a bit closer and thought, actually, MX-5s look quite good in white. A little bit closer and I started to realise this one looks nice. This is special, like the red roof, the red seats. Ooh, how much is this? £30,000 for an MX-5. At the time, I'd never heard of such a thing. MX-5s topped out at about 24, 25, I was sure, but prices at that time had gone up quickly, and the dealer informed me that they were having a price rise again soon. He wasn't just saying that, they really were. And I realised this was a special edition model, 100th anniversary edition, and they only sold 100 of them in this country, and if I wanted a new one of these, I'd have to get it now. Couldn't get a nearly new one because they didn't exist. But I thought, that price, nope, not getting that, and I left. And I continued my search for used ones, but I couldn't stop thinking about it. And I thought about it for about a week, did loads of research, watched loads of YouTube videos, and I ended up going there and buying it just because I really wanted it. I really liked the styling of it. But even when I looked into it, it didn't look that much more expensive than the nearly new. It was a bit more, but not much more, because again, I've got 0% finance on the new car, but nearly new, which would not have been that colour scheme I wanted. It would have been a different colour. The price, overall price, wasn't hugely different. So it worked out pretty well. And by chance, I actually saved a bit more money by buying that car, because I sold my MX5, I won't talk about. I bought the MX5, I sold my VX220, which is the car that the MX5 replaced, and I got £15,000 for it. And my plan was to use that money to pay off some of my mortgage. Maybe I would save some money on my mortgage. But I did better than I thought, because in doing that, that changed my loan to value, which lowered my interest rate, which then saved me £150 on my mortgage per month unexpectedly. So that worked out pretty well. Yes, I paid a lot more than I saved on my mortgage for the car. The car cost me a lot more than I saved, that's what I'm saying. But that saving is long term. So that's the reason why I bought an MX-5. Yes, that's my man maths, that's my logic. I bought a new MX-5 to save money on my mortgage. So yes, sometimes buying a new car does actually make sense. Not always, depends on the market, but it can make sense. Just make sure the car is right for you. Test it thoroughly, and also make sure that you really want it. Are you going to still want it in a year or two? Are you still going to be happy to make those payments even when you've got over the novelty of getting it? Well, I hope this video helps you make a good decision when it comes to buying a new car. If you think it will, please give it a thumbs up, and if you're looking for car insurance, check out the links to Collingwood and Confused in the description. If you're learning to drive and want to insure yourself on somebody else's car, then Collingwood are there for you, because you can do so without affecting the owner's policy, and that takes away a big stress from the owner of that car. Via the link at the moment, there's up to 35% off and a £20 Amazon gift card. If you want to insure your own car, I recommend checking out the link to confused.com, because you fill out one quote form and get loads of quotes back from many insurers to compare who's cheapest. And you can change your car on that quote as many times as you like without having to do the whole quote again. So it's a quick and easy way to compare how much it costs to insure different cars. Using the links doesn't cost you anything, but it does support the channel, so thank you very much. Subscribe to get my future videos, and until the next one, cheerio.